Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to uncover the real story. And let me tell you, sometimes the stories are as quiet as a mouse in a library, but other times, like today, they're more like a well, you'll see. Today we're diving into what Rowe Select Private Credit Fund has been up to, and it's all about distributions, money, and where those shares are headed. Think of it as a snapshot of a fund's financial health and its plans for the immediate future. Before we get too deep, if you're all about getting straight, no-nonsense insights from these important corporate documents, make sure you're subscribed. And if you want to chat more about these numbers and connect with other savvy investors, our Discord community link is in the description below. So, what exactly is this document? It's a current report, like a quick update to the public about significant happenings at Rowe Select Private Credit Fund. The main reason for this filing is to tell everyone about some recent distribution decisions. This is where the action is. The company on the 24th of September 2025 decided to pay out distributions. Think of distributions as the profits or a portion of the profits that a fund shares with its investors, its shareholders. They've got different classes of shares like Class I, Class S, and Class D, and each got a different payout. Let's break down those numbers. For Class I common shares, the regular distribution was $0.2 per S-share, and there was an added variable supplemental distribution of $0.03, making for a total net distribution of $0.23. Class S shareholders saw $0.181 as the net regular distribution plus that same $0.03 supplemental, totaling $0.211, and then for Class D it was $0.1944 regular, again with that $0.03 supplemental for a grand total of $0.2244 per S-share. Now, what does this mean? It means the fund is making money and is ready to share it with its owners. The supplemental distribution is interesting because it sounds like something extra, perhaps tied to good performance or market conditions. They plan to pay these out around the 31st of October to shareholders who own the shares by the end of September. And importantly, if you're part of their plan to reinvest distributions, these payouts will be put right back into buying more shares. This is a common strategy to help your investments grow over time. Now let's shift gears to the fund's overall value. This section gives us a look at the net asset value, or NAV, per S-share as of the 31st of August 2025. The NAV is essentially the market value of all the fund's assets minus its liabilities, divided by the number of outstanding shares. It's a key indicator of how much each share is truly worth. This is crucial stuff. The total value of the company's assets, its aggregate NAV, was a hefty $1,459.4 million. That's a lot of money. The fair value of their investments, meaning what those investments are actually worth on the market, was even higher at $2,555.0 million. You can see trades a difference between the NAV and the investment portfolio value, which can happen due to various accounting practices and liabilities. What's also noteworthy is their debt. They have $1,160.6 million in debt. Now, how does this debt compare to their equity, their net worth? The filing says their debt to equity ratio is about 0.80 times. This means for every dollar of equity they have about 80 cents in debt. Generally, a lower debt to equity ratio is seen as less risky. A ratio of 0.80 isn't T-sky high, but it's something seasoned investors will keep an eye on, especially in changing economic climates where a lot of debt can become a real burden. And finally, let's talk about how much the fund has been selling its shares. They have an ongoing offering, meaning they are continuously selling shares to the public, aiming to raise up to $2.5 billion. The table here shows how many shares of each class they've sold so far, and the total money they've brought in from those sales. For Class I shares, they've issued quite a lot, 46333 shares, bringing in $1,268.2 million. Class S shares are fewer, 3893222 shares, for a total of $107.0 million. And Class D shares, 4619292 shares, generating $124.8 million. This shows active fundraising. They are actively bringing in new money to invest. The fact that they have different share classes with different amounts raised suggests different investor needs or perhaps different fee structures associated with each class, which is pretty standard in the investment fund world. They plan to keep selling these shares monthly, so they are clearly looking to grow their assets under management. So what's the story here, T? Rowe Select Private Credit Fund is actively managing its investments, distributing profits to shareholders, and continuing to raise capital. The distributions show they are profitable enough to share the wealth, and the ongoing offering signals confidence and a desire for expansion. The debt level of 0.80 is manageable but warrants attention, especially given the private credit space can be a bit more sensitive to economic downturns. Now, my take on this, from what I see in this report, the fund is functioning as intended. They are making distributions, which is good news for investors who are looking for income. The net asset value also provides a baseline for the fund, S-worth. The fundraising activity indicates a positive outlook from the company, S-management, and likely from new investors too, who are pouring more money into the fund. However, this is a snapshot in time. For private credit, understanding the underlying quality of the loans and the economic environment is paramount. 0.80 debt to equity ratio is not alarmingly high, but it does mean the fund is using leverage to amplify returns, which also amplifies risk. The supplemental distribution, while a positive sign, could also be a way to attract new investors or retain current ones in a competitive market. It's always wise to look at the history of these distributions and the fund's performance over several periods to get a more complete picture. Given the information, the fund appears to be on a solid path, actively managing its assets and its investor base. The main strength lies in its ability to generate and distribute profits and its clear strategy to grow through continuous offerings. A notable risk, as always in private credit, is the potential impact of economic downturns on its loan portfolio and how that might affect future distributions and NAV. For now, it seems like a well-oiled machine, but like any investment, vigilance is key. Alright, that's our breakdown of T. Rowe Price O'Haare Select Private Credit Fund's recent filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.